Did the pizza delivery guy, who is a hobby investor, also tell you that Adobe's stock price doubled in the past year? Would it be a smart decision to buy now? In today's video, we will analyze Adobe's stocks and present some facts that would be hard to question. This is quite important before starting our investments if we don't want to end up like my Albanian friend who staked his family's wealth on FTT coins when they still had a wealth. This is the Smart Invest. Curious about the further growth predicted by our sharp analysts and what the numbers say from an amateur investor's perspective. Is it a smart buy now for Adobe stocks? Stay with us for a few minutes and let's find out together. As a bonus, I will also talk about my own purchase of Adobe and the reasons behind it, revealing the mistake I made. If all of this doesn't help you better understand Adobe's valuation, it might be better to invest your money in exchange-traded funds. Adobe's stocks have achieved over 130% return in the past 5 years. With a modest market capitalization of nearly $280 billion, it's evident that Adobe is not a small player. In the last 12 months, they achieved $19 billion in revenue and generated a net profit of $5 billion. The price-to-earnings ratio is 55, which is a substantial value, but the 34 forward price-to-earnings ratio suggests an expected nearly 70% growth in EPS in the next 12 months. Looking at the revenues, we can see a steady increase in almost every quarter, which is a rare sight. Being a software company, they operate with a very high gross margin, consistently close to 90%. The operating margin beautifully increased until 2018, then plateaued around 35%. The profit margin has also been consistently around 30%, which are wonderful values for us. But what exactly does Adobe do? Adobe Inc., together with its subsidiaries, operates as a diversified software company worldwide. It operates through 3 segments: digital media, digital experience, and publishing and advertising. The digital media segment offers products, services, and solutions that enable individuals, teams, and enterprises to create, publish, and promote content. And Document Cloud, a unified cloud-based document services platform. Its flagship product is Creative Cloud, a subscription service that allows members to access its creative products. This segment serves content creators, students, workers, marketers, educators, enthusiasts, communicators, and consumers. A very positive thing about Adobe for me is its market share. In the graphic software market, Adobe products hold the top 3 positions, covering over 80% of the entire sector. One popular strategy, even for Warren Buffett, is to invest in companies with unquestionable dominance in their own sector. This is very true for Adobe. Looking at Adobe's charts, we can see quite strong past growth. Earnings per share have been significantly increasing since 2015, with some minor setbacks but recovering afterward. Free cash flow has continuously increased, and nowadays Adobe generates nearly $2 billion in free cash flow every quarter. Another crucial factor, which is often critical when I buy stocks for the long term, is the shares outstanding. In this case, the change in share outstanding was important for my Adobe purchase. In recent times, especially in the last year and a half, Adobe has been buying back its own shares at a high quantity. This is, of course, due to the fact that the stock has not had the best period in the last year and a half. Adobe's stock price managed to fall by 61% during this period. When an excellent company goes through a bad period, thanks to its strong free cash flow, it can buy back its undervalued shares in large quantities. With this move, due to the low stock price, they can induce higher deflation in their shares than usual. This can be very powerful and spectacular over the long term, over several years. It's visible that from 2022, when the stock began to plummet, they started buying back their shares more aggressively than usual. What do our analysts say on this critical topic? But first, just quickly, a simple like or comment can help the algorithm and sponsor my hard work, guys. Thank you a lot for that. For the next 12 months, we see forecasts ranging from $730 to $320 per share, so we don't need to be very smart to figure out that, according to them, there's more way down than up. Nevertheless, another interesting thing is that our precise analysts didn't consider Adobe stocks as such a clear buy in April when they could be bought for $300 per share, but now, just before Christmas at double the price, most of them think it's an excellent buy. Let's also look at slightly longer-term predictions. I found one that suggests we could sell the stocks for almost 3 times their value by 2026. But there's something even more brilliant. We can re-enter the game in 2040 and make nearly 3 times the profit in the next 10 years. Smart invest. But why do I see good chances for further future growth? Primarily because the rapid development of artificial intelligence in the coming years can significantly boost Adobe's business activities. Adobe excellently uses the advantages offered by artificial intelligence in its products. If we add to this the fact that it has already shown excellent growth, we could assume that the improved use of artificial intelligence won't be detrimental to its business. They have all the prerequisites to leverage the new technology and further scale their business model. But how does my own Adobe position perform, and what mistake did I make? On a wonderfully cold, rainy, and bad day on September 29, 2022, I judged that Adobe's stock price had fallen into exciting depths. So my first purchase was at a price of $278, but later on, I made a big mistake. Although I bought more stocks in the next dip, afterward, the stock started to rise. I opened a small position almost at the absolute deep, but I expected further decline and wanted to build a significantly larger position. Later on, of course, the situation only got worse, and the stock price started to rise suddenly again. So while I currently have an average price of $293, with an astonishing 96% return in just over a year, the size of my Adobe position is less than 3% of my portfolio. Even though I perfectly saw the situation, I hesitated and wanted to enter the market at a lower price. I would like to keep my Adobe stocks as long as the company continues to deliver similarly good results. In the case of a more substantial correction between 20% and 30%, I would probably further expand. What do you think, guys? Will Adobe's next report bring further growth? Or could the long-awaited correction finally come? Or do you own Adobe shares in your portfolio? If you liked the video, found it informative, and would like to help me on my journey toward 1,000 subscribers, please press the like button and subscribe. Take care, guys, and see you on the next episode. Try not to lose all your money in the stock market until the next video.